Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options.
A quick review of the presentation, what we've talked about. Here's just again the metrics behind the spread trading webinar. Again, info@ostockTrading.com. Or you can email me directly, 9 a.m. Eastern, Tuesday, April 20th. It's free to attend. Got to register by Sunday, April 18th. Again, what we talked about in the presentation, we went over a background of the chronology of the European debt crisis, gave you guys, in light of what Fotis talked about, in light of the impending fundamental catalyst, which I can totally see playing out, in light of the historical low volatility we've seen, it sets up one of those once every couple of year positions where you now have the metrics, you now have the tools with the ISE products to make a play on that market. And I've gone over some of the real-time application in terms of looking across at these charts here, and then I've also discussed the upcoming projects as well. I think it's a good time to get some questions. And Steve, if you can MC the Q&A session for Fotis and I'd be internally grateful to you.
Sure, John. The first question I have is to Fotis, and Fotis was talking about 1 or 2 years from now, all bets are off, and he was talking about government bonds, oil,
yes,
and currencies. What would make you change your mind, Fotis, that everything would be okay? I mean, 6, 9, 12 months from now, what would the world look like if you said, okay, things are going to be much better than you're seeing them now?
Okay. We have to watch for signs of social unrest in the next 2 or 3 years. And the reason I'm saying this is because governments in Europe must take some very hard measures in order to move out from the crisis. What it will take to go out of the crisis is a very strong bull market, which I don't think will happen. We're going to have deflationary pressures all over Europe, and this is very difficult because, as I said, prices go down, but liabilities remain the same. It will not change. I don't think Europe on its own will be able to solve the problems without the help of the United States. We would have to see some coordinated action from both sides of the Atlantic to attack this crisis. But overall, I'm sorry to say, but I'm a little bit pessimistic about 2 or 3 years from now, because I don't think it will be extremely difficult to apply all these difficult measures that must be taken from governments in Eastern Europe and the European South. So watch out for social unrest. This will be key in order to understand what is going on, what will happen in the future.
Well, Fotis, what about quantitative easing? And if the central banks continue to do it in some other form, they say that they're stopping or they are slowing down this process. But what if they feel the same way that you do and they're going to keep buying all kinds of different things for the next 12 or 18 months? Don't you think it's possible that you could have the opposite problem?
Okay, I will tell you why it is very difficult for Europe. The European South cannot compete with the European North. We have Germany and France, which are very much technologically advanced, and they have a very efficient. They are very efficient production-wise. And then we have agricultural societies like Spain, Portugal, Greece, Italy. It is very difficult to compete. It's very difficult. And this is very difficult from the European government to apply measures that will be the same for all countries and will help to ease the situation. In the past, what was done was the best weapon was to devaluate the currency. Now this cannot be done. We have one common currency. Greece cannot devaluate euro. So it will be very difficult. And what will happen, I think, in the future, we will have, perhaps in Germany or France, inflation, and in the European South, we will have deflation.
I'm curious, for your point, Fotis, on this quote that was in the Financial Times last week. I'm not sure if you read it or not, from Wolfgang Monschu. I'm going to read the whole, it's a long paragraph. I'm going to read it to you.
Yes.
quotable on Greek debt. To get out of the mess, one of five things have to happen. The first and the most optimistic solution would be a significant fall in the euro's exchange rate, say to parity with the U.S. dollar, coupled with a strong recovery in the eurozone. Second is that Greece gets access to low-interest loans, sort of what happened actually over the weekend from the EU and the IMF. The third would be a private sector debt restructuring to prevent Fisher-style debt deflation dynamic. Fourth is that Greece leaves the eurozone. You say that's impossible. And the fifth is default. His point at the end is that default is the only option and it's consistent with what we know. What's your take on that, Fotis?
I think, as I said, first of all, let me say that Greece will not move out of the euro. The Europe doesn't want Greece out of the eurozone, despite what is said on the media, and it would be suicidal for Greece to move out for the euro. And even if Greece did want to move out from the euro, this cannot be done. It is extremely difficult from a legal perspective for this to happen. I will only stay with the last statement, that case of default. I think the best solution for Greece would be that is to say, okay, how much do we own? To restructure the debt. This would be the best solution. However, it is politically wise, it is very difficult. It will create enormous pressure within the Greek society, and I don't think they will do it. Because what happens now, they received cheaper credit from Europe, but they will need, guys, 80 billion, 100 billion, 3 years from now. And I cannot see how they are going to make it. If we had a very strong bull market, we would have a chance. Right now, things are tough.
Right. Andrew says devalue, but devaluation doesn't help because you're part of the euro, so it doesn't really help, right?
Exactly. This is what I said. You cannot devaluate because you are part of the euro. You cannot devaluate your currency. How are you going to do it? The only solution for Greece is deflation.
Right.
But it's going to be very difficult.
And if you leave the euro, Andrew's point, because he's a frequent attendee, he says leave the euro, that would be chaos, wouldn't it? And also complete austerity.
I'm not sure I understand his statement. I don't think, does he mean to leave the euro?
Right. To leave the euro, obviously that would be, and then restructure also, I guess, right? Because, I don't know, use the value, create our own, I mean, it would be many different things would have to occur.
It is not going to happen because it is very complex and nobody wants it. What will happen if Greece leaves euro? What will happen in the bond market? You will have the same spreads. What happens today with Greece will happen to Spain, to France, to Eastern European countries. It will be a mess, and nobody wants this to happen.
Right. It's not dissimilar to what happened to U.S. brokers that had a lot of debt, right, during 2007, 2008. Once everyone found out that one broker had too much leverage, they started selling the next broker and the next broker and the next broker, right? It's basically contagion.
Yes, this is what I'm afraid. And you see, Greece was the tip of the iceberg. In the whole Europe, the situation is very similar. So what the European leaders were afraid was a case where the crisis spreads to the debt market, and especially in Eastern Europe. This is the biggest problem. Eastern European debt is the biggest threat for Europe.
And so it needs to be restructured, you would think?
I think the best solution was to restructure the debt, but for political reasons and for reasons that they don't want to create social unrest within the country, they will not do it. They will try to earn some time for 1 year, 2 years. They will try to cut the budget as much as possible, but the value of money that they need is enormous. And it's not only Greece, remember, it's the same happens with Spain, with Italy, with Portugal. It's going to be very difficult.
Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts.